Howdy, howdy, folks. Happy Friday. And this week ended on a bang. Just a very volatile week. Stocks completely U-turning from yesterday's insane short squeeze, and we saw it almost not completely given back. Actually, not really. About half of the gains given back. If we just take a look at, I'm over here looking at AMD's financials. Um, Jump in here on the daily on the S&P 500. I mean, we gave about half of it back. We opened way up here at 37.10. We ended up closing down here at 35.81. I mean, just crazy. Two back-to-back days with insane like plus 2.5%, 3% moves. Just craziness. And I'm going to get into a little bit about why I believe that we did get that red day today. A pretty big headline that came out today. First things first, I didn't even do an intraday day. Well, actually, I did one intraday trade today that I sold it basically break even for $1 because by the time I took the trade, things were just so choppy, and I was just not liking it. I got out green, technically green, barely in actuality. But overnight, I swung myself a AMD call, two of them, for next week at $60. Because based on these 3 days, we had these 3 days of consolidation here on AMD. One, two, three, just three dojis, nothing. We finally get a big green day on big green volume, and we're bouncing. Look at this red trend line down here, this bottom big old red trend line. This is where AMD's bounce, and I hit this one last time back here in July. I nailed this. I bought a call right there. It ripped up. I took profits and then came back down, and then it just went crazy. And I was sitting there like, oh my god, my calls went up like 500%. So I was trying to like recreate that. I'm not gonna say I regret taking the trade. It was a nice setup. We bounced right off that support trend line, bounced right off of it, clean bounce. Look at this. Last time it bounced, it was a nice big old green candle on nice volume, and we got some follow through. But this market is. I'm almost about to just enforce a rule on myself that I have to go all cash at the end of every day because it is just so volatile. You don't know what the hell news is going to come out to cause it to completely reverse. So yesterday we get this nice green day on AMD. I'm holding the call. I had a pretty good price average on it. And today, what do we get? We get a nice gap up. I mean, we gapped up barely. Not even. I mean, we got to zoom into the 1 minute candle on this because we immediately sold off on the gap up. So this is just like my SPY put yesterday. I should have just sold it at open because we gapped down. I could have taken a nice profit, but I got greedy. And we gap up and we hold up here for a single minute at open and then just fill gap straight down. And my calls just got destroyed. And I took about a $100 loss on them. So that was my loss cap on the day. I was like, that's all I can do. I can't go any more than that. I need to preserve capital. And I think we'll get some nice trading sessions from next week. But yeah, I mean, it's brutal. It was a nice setup. I look at this on paper and I hide that and I think, hey, we finally broke above this range. AMD was resistant at $59, 3 days in a row. We finally get a break above it on good volume, and this thing has just been completely hammered. I mean, AMD is just in the gulag right now. This thing is down from $104 just back in August, clear down to 54 bucks over here in October. So over about the span of about 2 months, it's lost half of its market cap. And I'm just like, there's got to be a bounce. And I guess the bounce only was yesterday. That was the only bounce we got because everything just completely sold off. All the tech stocks, I'm thinking, hey, Nasdaq's finally getting a nice bounce here. It needs a bounce. And Nasdaq just gave it all, not all of it back, but it gave a huge chunk of it back. Just miserable day today for any of the bulls out there, which unfortunately I was because I held calls overnight. So now we know the Nasdaq, it doesn't like this price up here at 271, 272 area. It does not like that. That was the previous lows that we had over here back in late September that we bounced off of. We double bottomed off of these at 272, and now we just ran up to it. Past support is now present resistance. And the selling was immense. I mean, look at this 1 hour candle, the volume on there. You can hardly see it because of this ugly channel, but look at that. Just that first hour of today was just sell everything. It was crazy. So much volume on this selling, just insane. So we got our little short squeeze slash bull trap, and now we're back in the dump. And that's about all I have on the session today. I mean, if you missed this first move in the morning, the rest of the day was kind of a choppy mess. I mean, there was about another $4 over the next, like, it took about 3 hours for the market to lose another percent. So that was pretty choppy at the end of the day, but I'm just at the point where it's like, who knows what's gonna happen next? Because I remember 2 weeks ago, I was so bearish going into the weekend over here, where we got our way over here, where we got this dump back in back at the end of September, the last day of Q3, where we got this dump. I'm thinking like, man, I'm mega bearish right here, and then we got our big green, two huge green days back to back, immediately given back. So now we have just these crazy, like, I've never seen anything like this. These two daily candles, like a one massive green one, massive red one, just crazy. The weekly candle is probably a big fat doji. The weekly is just a nice big red long wick on the bottom. Just craziness. So I took that loss on the chin, and it sucked. I went in the week on a bang, and I was thinking, all right, this is looking like short squeeze territory. You see a big ass green day like this on the Nasdaq with this much volume, so much volume you have to zoom the chart out because the candle is obscuring your view of it. Like, look at that. Where is it? Just gone. Just gone. And I think so. I'm going to jump into why I think this sell-off happened. It wasn't off bank earnings. Bank earnings actually were good. Banks actually, a couple of banks. I mean, Wells Fargo beat their earnings estimates. J.P. Morgan beat earnings. Morgan Stanley missed because of investment banking. They suffered like a 50% drop in profits from investment banking, of course. That industry gets hammered during pullbacks like this. Same with Citigroup. They also missed on expectations, and they blamed it on their investment banking sector. So J.P. Morgan basically saying that businesses are still strong, consumers are still strong, people are still spending money, debt isn't going crazy yet, but I don't know, maybe we're at the point where the market was hoping for bad bank earnings because the market wants to see the consumer starting to pull back on their spending, because if they don't, inflation just keeps going. If they don't, the Fed they're just going to keep jacking rates up until consumers stop spending so much, and that's their only way of stopping inflation, is by doing that. Otherwise, inflation can just get out of hand. And now this headline came out 11:37 today. And let's see, did the market dump right at 11:37? I wouldn't be shocked, because this was a pretty nasty headline. 11:30. Oh yeah, not really. But this is very bad. This is year ahead views rise for the first time since March. So this is what consumers think inflation is going to be a year from now. You can see this graph. It had been coming down. I mean, consumers, once gas came down, that really affects this because gas is a huge chunk of everything, inflation-wise. But it came down over these past couple months, but we got an uptick, about a 10% bump on this from 4.7% back in September. So consumers are expecting inflation a year from now to be at 4.5%. That bumped up over this last month, and now it's at 5.1%. About 10%, 0.4% of 4%, 10% bump up on that. So that's the first time that's happened in 7 months since like March. And that's really not good, because that's half of the equation. That's half of what the Fed is trying to do. They're trying to keep inflation expectations anchored. That's why inflation is so sticky, because it has so much to do with just psychology of people. If people expect inflation to just keep going crazy, then that feeds into it. And they are trying to. That was one of their proud things, was that, hey, inflation's bad, but at least the expectations are anchored. They are not just going crazy. But now we see an uptick that people are thinking, uh-oh, it looks like inflation's here to stay, and that's a little spooky. You don't want to see that stuff. So a good example of why you don't want to see this and why the Fed is so concerned with just inflation expectations is the 1970s. Let's look at CPI inflation 1970s. So we just had absolutely crazy inflation back here in the 70s. Here on the right, you can see CPI inflation. We had crazy inflation, and it became unanchored, and that just made it worse and worse. 74, we had 11.1%, 9.1% year over that. We dropped down to 5.5%, but hey, look at that. People were thinking, look, it's going away. bam, it's back. 6.5, 7, and then it got really bad late 70s. 11.3%, 1980, 13.5%, 81, 10.3%, and then we got the Paul Volcker rug pull. He jacked up interest rates to 21%, the most they've ever been, and he just straight up rug pulled the economy. And he was like, nothing's going to stop this inflation, but I know it will. And unemployment went to about 11% at that point. Keep in mind, we're at 3.5% right now. Unemployment skyrocketed. It's just consumer spending just went down. Everything dropped, and inflation eventually eased. And everyone was like, "Hey, look, I guess inflation's down." And look at that. Since then, things were nice and steady. 6.1% in 82, 3.5, and then we got a nice. We're finally down. 1986, below 2% inflation. All is well. But then there was still a little bit of high inflation through the late 80s. But 90s were great. Early 2000s, inflation just great. This entire past like 3 decades, just no inflation, no inflation, no. Oh no, 2022 we're at 8.6%. Oh god. So, um, why is this important? Well, back in the 70s, inflation expectations were completely unanchored. Everyone was with a big part of it was we just got rid of the gold standard. That being where every dollar was backed by a piece of gold in the U.S. gold reserves. Nixon scrapped that, and everyone was like, "Well, what the hell? This money's worth nothing now. What's backing this money? There's no gold. There's no physical object backing this money. It's only got value because everyone agrees it does." So that was just a big political thing that fed into the inflation. It was just like, well, they're just printing money. It's worth nothing. They just pull it out of thin air, which basically, yeah, that's true. But it's got value because the U.S. government agrees to back it no matter what. But that was a big thing that fed into the inflation back in the 70s. So it was a big political thing. But now I would say our new like gold standard, what they were worried about the gold standard back then was us. Our equivalent now is worrying about how the Fed printed just trillions and trillions and trillions, and the government is printing trillions and trillions and trillions. And that was what they were worried about happening back in the 70s. They were like, well, what's going to stop the government from just printing all this money, basically? And 50 years later, they were right because, yeah, good point. There's nothing stopping them now, and they do. So that's where we're at. And of course, that has devalued the dollar. But why am I talking about this? Because it was so bad back in the 70s because of how bad everyone thought it was going to be. And it's just a self-fulfilling prophecy that, hey, inflation's bad and it's going to get bad. So I'm going to go to my boss and be like, you see how bad inflation is? I need a raise. Every store is going to jack up their prices because, hey, see how bad inflation is? We're going to raise prices. We're losing money due to inflation. So that's the psychology behind a lot of this, and that is why when you see the expectations bump up, that's scary. And you pair that with a CPI report yesterday that was really bad, that is like confirming that yes, consumers should be expecting inflation to be this high because it is this high. But this is still pretty positive that people are thinking it's going to drop to 5% by next year. I mean, sheesh, that's pretty optimistic. But it's a ticking time bomb. It's just the longer it goes on, the more these expectations rise and rise and rise and rise, and then the harder it is to fight inflation, and the more that they have to rise and rise and rise and rise interest rates. And right now, interest rates are only at like 3.5%. So we are still, in the grand scheme of things, at a pretty low interest rate. And that just means it's gonna have to just keep going and going and going. So I think all hopes of a Fed pivot are gone for the near future, at least. I mean, as they should be. Because like why would they pivot when inflation is still this bad? But the thing the Fed won't say, they will not come out and say, hey guys, we know if we crash this thing that it's going to kill inflation, and they're never going to say that. They still come out and say the idea of a soft landing is still possible, but probably not. They still even say soft landing. It's like, are you guys insane? God, what about this looks like a soft landing? So, anyways, um, it's anyone's guess why the stock market did today, why it did what it did yesterday, and why it did what it did today. It's literally anyone's guess. Like, who knows? Looking around the market, AMD is at $56 a share. This is the price. We're gonna have to zoom out a little bit. This is the price AMD was at way over here back in June of 2020. See if the earnings show up. back here in June of 2020. Wait, where am I? Back over here. You can look at their earnings, and they were making their revenue back here, back in 2020, was like, it was around like 2 billion a quarter. Right now, their last quarter was 6 billion. Their revenue has tripled, and they are at the same price as they were back when their revenue was a third of what it is now. It's mind blowing. It's like, I mean, if you're looking for long-term buy and holds, I can't recommend anything. I'm not a financial advisor. I give no advice, but I would think something that is earning 3 times more money at its current price now than it was at this price 2 years ago. I would say that'd be a good buy. Whether or not it keeps going down is anyone's guess. But it's crazy. You look around the market and you look at all these companies that are earning so much more money. You like look at Nvidia. Nvidia is the same thing. Nvidia is now way over here. It's at the price it was back in August of 2020, and its earnings since then are let's look it up on Webull. I got it pulled up here on Webull already. Come on, Webull. So they were making about 4 billion in revenue for Q2 of 2020, or no, Q2 of 2020. Yeah, this is a Q2 2020. They were making about 4 billion in revenue. This last quarter, they made about 6.7% or 6.7 billion in revenue. Um, it's just from like a value standpoint. If you take out the big picture, from a value standpoint, a lot of these names are getting pretty attractive. Um, but obviously the sell-off is because a lot of their gaming revenue that they called it, cryptocurrency revenue basically, is gone. That has just completely halved. So that's a big worry. And then ultimately worries about these companies like Apple and Amazon just starting to make their own chips, which they are looking into making their own chips. So that's scaring a lot of the semiconductor sector. But you can just go around. There's endless stocks. You can go around and just look at their revenue 2 years ago and look at it now, and then you'll see that holy crap, they're making way more money, but they're at a lower price than they were at this point. It just that's the market we're in. I just had to give a little like context. I zoom out and I see these things, and I'm just like, this is crazy. We are in like major pain right now. Like, it doesn't feel like it though. Like, there is just not the panic. We just haven't got that panic capitulation. I mean, VIX is hovering around 32 right now, and it just it had a weird day today too. It came down. I mean, it's like what is happening? And so if you're confused, then it confirms you're still a sane person. You haven't completely lost your mind, because this is just a highly volatile and confusing market. And now it's just like, who knows what the market wants right now? Over the summer, the market was thrilled that earnings weren't as bad as people thought, so we rallied, and they were hoping that the Fed might pivot at some point. They hope maybe by the end of this year the Fed might pivot. But now the market sees really good bank earnings. That's confirmed. The bank earnings were telling us that businesses are still strong, consumers are still strong, all these things are still great. But now I think the market has finally realized that this good news is actually bad news, that we need to see bad news, and we know that now because the market dumped after we got that unemployment rate number came out last, I think it was Friday. Yes. So we know that good news is bad news, but then we get bad news, and then that's still bad news. And then we'll still get sell-offs on some of these stocks. So it's crazy. And all you can really do is just zoom out and look at the big picture, and you see we're in pain, but it's hard to zoom out when you get like green days like yesterday, when the Nasdaq goes from 254 and it closes at 270 in one day. And why it happened on a day where we get our inflation news coming out that's telling us, yeah, inflation's still bad. I mean, if you went up to some random guy on the street and you're like, hey, you know the stock market, right? Well, it's down really bad because of how high inflation is and the Fed's raising rates. But we got a report about the inflation, and it said it's still really bad and it's getting worse. What do you think the stock market did after it's been down because of inflation? And that guy would probably be like, well, I'm sure it went down, right? No, that's the biggest green day ever. So that's just you got to have a fine balance of big picture outside of the stock market, and then just fundamentals with price action. And this was just clearly a fundamental bounce because of how oversold we are, how many shorts there are, how much momentum can get going to the upside because of how many people are in shorts and they start to cover their shorts, and that just pushes it up, pushes it up, pushes it up. So it's just something I struggle with personally because it's like it's hard to not get bullish when you're like bouncing off these huge levels with such crazy volume and such power to the upside, and to not get a little bit bullish, but then you get a little bit bullish and the next day it just dumps. It's gone. And the gains, they're gone. Um, yep, and that's about that. Crap, there was something else I was gonna say. Um, but yeah, just take it easy out there. I mean, we got our sell-off signal on the SPX. We broke the 30-minute, 50-minute, or the 30-minute, 50 simple moving average, this yellow line. We broke below it. We tested for like 2 hours. We're testing it, and then we get a hard reject, and we finally sell off. So if you're in shorts, the system is telling us the market's going to continue to go down from here, but it's anyone's guess because we're going to have earnings next week. We're going to have a lot of big companies having earnings, and yeah, it's tough out there, you know. So if you're if you're frustrated, you just gotta take out emotion. The market has no emotions. This isn't personal. The market's not doing this personally to piss us off. It's just the way it goes, you know. Um, and you can only control what you do. You cannot control the underlying equities. Um, Crap, I really wish I could remember what I was gonna say. Anyways, this video is long enough, 22 minutes. So watch out there, folks. We got a long few couple months here. A long rest of this month, November and December. So take it easy.